Good afternoon, everyone. Welcome back to the Schwab YouTube coaching channel for our next topic. It's after the close, and I am your host, Kevin Horner. Thanks for being with me here this afternoon. Today, we are going to take a look at how things finished off the market session. So we're going to start with a brief review of our major indices, work our way through some sectors in terms of leadership, and then we're going to look to place a couple of new example trades within our example portfolio and wrap things up with a look at the example portfolio so that we could make adjustments or changes coming tomorrow to existing positions in that portfolio. So with that, let's get to it. Remind you all, we're joined by my friend Brent Moores in the chat today. He and I will be working together tomorrow morning for Trader Talk, so don't forget to put that on your calendar. On a Wednesday ahead of Thanksgiving, we'll be running through the open tomorrow at the opening bell, so put that one down on the calendar. But Brent and I would really appreciate a follow on X as well. You can do that for Brent Moores CS, and for me, Kevin Horner CS. Without a doubt, the best place that you can get questions answered and engage with us coaches when we're not hosting classes for you here on the channel. And last note, make certain you're subscribed to the channel as well. That way you're getting all that you want from us on a day-to-day basis. Remember, we're here every day live Monday through Friday when it's not a holiday at least, and you can expect to see classes available to you from 9:30 a.m. Eastern all the way through about 4:45 p.m. each day of the week. So with that, let's get to our disclosures. I want to remind you that our conversation here is exclusively for your information and your education. We do not make recommendations here. We do not make endorsements for any specific approach to trading the market. We will cover technical analysis. Incorporating technical analysis is very much a part of what I do for every one of our classes. We encourage you to think of that as simply one piece of your decision-making puzzle, not the entirety of it. So don't base decisions exclusively off technicals. We will be covering and utilizing options in our examples today. Options carry a higher level of risk and are not appropriate for all investors. You do need to be familiar with the characteristics and risks of standardized options. There's a document for that. And you want to be familiar enough to be approved on every individual account on which you would like to trade options. So bear in mind that you do need a separate application for each of those accounts. So if you've been applied and covered on one account, if you wish to trade options in another, make sure you're doing the same thing, getting approved on each one individually. And then finally, I'll remind you, since we work in a paper money version of the Thinkorswim desktop application, when you are the seller of options, you will never receive early assignment when working in the paper money platform. However, when you're doing these trades on your own, and in real life, you absolutely can be assigned early on any short option contract. That includes contracts that not only have time remaining, but could also be out the money. So always be aware if that is confusing or you have questions, we have representatives available for you every day, 24/7, and you can reach out and have a conversation with someone. All right, so there you go, everybody. Let's jump to our charts and let's take a look at how we finished the day. The S&P 500 came roaring back, and now the inevitable question is, did we come roaring back sufficiently to see if we have essentially put ourselves in position for continuation of our longer term uptrend that's been really working since we recaptured the 200-day moving average. Some would say when we got going in earnest when we took out the 20-day moving average, which kind of happened right about here. And then we got, after a week above the 20, we caught the 50-day. And about a week after that, we got the 200-day. We broke out, got thrown back to the confluence of the 20 and orange and the 200-day moving average in blue right there. And that was the beginning, essentially, or maybe the biggest portion of our rally from there. And since then, what we've done is pull back after that most recent peak in mid-October here. And so we had a pretty standard pullback in the S&P 500. And I guess the question remains, did we pull back enough? Did we get enough of a retreat that brought new buyers in? We pulled back less than 6% in this case. So the question now is, are we back on trend? And it's maybe too early to tell. We do have the highest close, market value close on the SPX that we've had since the day we started to move lower, 11-12 here. As you can see on the next day, the 13th, we closed at a level of 67.37, and today we're closing at 67.65. So, you know, in the analysis that I've been doing, I kind of pegged that 67.60 as a pretty important area. The fact that we closed 5 points above it might very well be sufficient for some of you traders out there. Others who are going to be looking for a bit more confirmation want to see a second consecutive day closing above that 67.60. And I'll show you why I pegged that a level, everybody. I'm going to just move this line up right to here, and you'll see we have been there a couple of times. If I changed this to an hourly bar, there's the look. So now we are looking at this over what would be 90 calendar days or 90 sessions, excuse me. And then you can see we have used this zone as resistance previously. Right in here, we pulled back from it. Right here, we pulled back from it. And then obviously the most recent time prior to today was right here. And not only did we pull back aggressively. We got all the way back to the bottom of that channel there at 65.50 or so before getting a bounce. So, you know, this is precisely what traders are trying to work through is, can we move through the next level of resistance? And while we've closed at this ledge, it remains to be seen whether this will be a break and continuation. If I wanted to put one more line on here, I could just do it through the peaks like so, which might suggest that we need to maybe push a little higher for a potential break. It looks like 6,800 is an approximation of that downtrend line. Could it be a little shoulder? Yeah, certainly could be, right? I mean, if we wanted to call all of this the head and then everything happening over here to the right, a potential right shoulder, potential left shoulder. But if that's the case, Gary, remember that we need a breakdown below this low here. This would be the neckline if that were how you were viewing this. So we would have to take out 65.50 to the downside on a closing basis to validate that potential evidential head and shoulder top, right? So, you know, we can always see these patterns regardless of our time frame. That's one thing about technical analysis that makes it consistent for so many traders is the ability to look at this on a daily chart, make it a weekly chart, make it an hourly chart, a 15-minute or 5-minute bar. You can take the same concepts into your process consistently, regardless of your time frame. So, very important level at which we finished today. But I think for many traders, the real question is, how does it go tomorrow? Because tomorrow will likely tell us or give us enough data to work with that we could have either a continuation breakout or a complete rejection at this 67.60 level. We'll see how that goes. Now, this chart on the NDX is going to look quite similar today because the NDX also was up, but also closed at a potential spot of resistance, right? The same zone. It's in my rectangle or really close to my rectangle of resistance there. And we've also got my downtrend line off the peak coming into that. And while we did close above the 50-day, the question once more becomes for all of us, is that a point where I'm ready to deploy new money? For a lot of traders, one day above the resistance area doesn't give them the confidence, and a lot of traders will wait for that second day, third day closing above it to help validate the move. If you're feeling uncomfortable, a lot of traders will just wait, sit on their hands. But if you say things like, if you're hearing yourself say things like, well, I not as confident as I'd like to be. Many a trader here, even though they're unconfident of the opportunity, they might feel compelled to at least have a piece. And if that's how you feel, my encouragement is to stay small, right? Keep it maybe 10% of what you would normally put on, so that you can see if you're proven right. And if you are, hey, then you can add. Remember, it's okay to add to a winning trade even as prices are climbing. Yes, your average price increases, but if you're playing for a momentum-based move, buying at higher prices is evidence that that's the trend you're working with. So keep that in mind as well. Okay, so NASDAQ 100, possibly I mean, we've had a good 3-day move, possibly at resistance, possibly capable of busting through. We're going to have to wait and see. Now, the interesting move, I think, today came from the small caps. The conversation around small caps for the better part of the last 10 days has been, what's going on with yields? What's going on with rates? Are we going to get a rate cut? Are we not going to get a December rate cut? So this has made a significant move in a number of ways. The first was the pullback to an area of potential support, which we pegged at around 23.25 or so. And so we found that 2 days, and then we've got 3 beautiful candles in a row, right? These candles are lovely if you're a bull. One big green, a second big green, and today a third big green candle closing through resistance at the 50-day moving average. Not necessarily the only resistance. We did take out the 50. We did close above the downtrend line. Let me remove the downtrend line and let's zoom in and just make note of the fact that we've also got a little bit of resistance here, don't we? We can see that we have moved. Oops, let's get rid of that arrow and redraw. We have tried to get through this band right here, basically. This is about 24.65 or so. This is an important level. You can see we've got some tails right there. So we've been there on the upside with a tail. Here we had a doji day or a spinning top. This day we got through it, couldn't hold. So yes, we're above the 20. So traders maybe in a more short-term time frame are feeling a little bit better, but you still have to give thought to the idea that we could get pushed back from this area. In fact, that white line should probably be a red line for the short term here until we get that clarity that we're looking for. And if we get pushed back, well, we can handle getting pushed back as long as it's to a higher low, right? So one thing I do want to give you, everybody, is a concept of how much should I be willing to allow this to pull back before maybe cutting bait on a trade that I thought could work that might not all of a sudden. So some of you would say, all right, under the 20-day, I wouldn't want to stick with it. And so they would say, you know what, if I got to close under about 24.16, I might move on, right? So let's color that one green. So that gives you an idea because, well, we should be looking to maintain the 20. The 20 was excellent on the way up. I mean, let's just go with exclusively the 20-day in orange. You can see, look, excellent support. 1 day below, and then we're back on trend. 1 day below, back on trend. A week below, almost a week and a half, back on trend. Okay, now we're back above it. So it was resistance here for all of about a month, well, really just about 3.5, 4 weeks. And then today we're back above it. So that could work, right? But if we pull back now, we don't want to give back more than half of the move to the upside that we've put on. So let's zoom in and let's do a quick Fibonacci just for fun. And then let's set my level so I know the 50% level. For a lot of traders, they'll say, I don't want to give back more than half of that move. So as long as it stays above this white line, and I'll leave that one white, then some new traders here might very well just want to stay with it as long as it doesn't give back more than half of this upside move. Ideally, it would only give back to the 20-day if it gave back any at all. I mean, in a super ideal scenario, it's just a continuation move and we're closing above the red line. Not as confident because there's plenty of resistance here. So just something to keep in mind, okay? So that's one way that a trader might look at these small caps. Let's take that knowledge with us into our sector review. What's moving for us today? Where is our leadership? Well, our number one is in healthcare. Wow, you just can't get away from healthcare. It just keeps moving. So let me apply my moving averages back. The 20-day catching up with my gap with the former resistance, now potentially support on any throwback. This obviously bull flag resolving to the upside. Let's see if it's made the measured move here. Not quite yet, but getting there, right? So at least the measured move While that might be a potential target for some traders, no guarantee that we're going to get there, but that is a lovely developing upside pattern that you're getting out of healthcare now. And, we've been talking about it in my classes all the way back here into the summer when things started to change. This whole sector has improved of late. And so we can do a couple of different things here today if we're leaning bullishly, perhaps based on what we've seen with your S&P, your NASDAQ 100, and your Russell. It looks like Russell's in a leadership position based on what we've seen for the last 3 sessions. Maybe we look for healthcare as an example of bullish scenarios, right? So perhaps a screen for S&P 500 stocks in healthcare. That could be a screen for stocks that are maybe in that space and oversold. It could also be a screen for stocks in that space that are already in the process of making new highs, maybe very well moving to new highs already, right? So great call out as well, Gary, on the volume down below. Clear big increase to volume, right? In fact, if I went into my study tool here and added volume as an average, see if I can put that in there. Yep. So the 50-day average of volume, and we put that line through my chart, well, now it's a little bit more evident, isn't it, Gary? You can clearly see how volume has been moving into healthcare. Why is it significant that it's through the horizontal line there, everybody? That horizontal line is the 50-day simple average of volume, right? So knowing that, that is a heads up. That movement is not you and me. It is not our grandmothers and children buying up healthcare as a sector. That is institutional investment. We as retailers are incapable of driving volume to that extent. So the likelihood is when we see this, the likelihood is it is institutional ownership in accumulation phase pushing into healthcare. So what's really intriguing by this was if you looked at my this consolidation period where we really just kind of went sideways in here, right? As we built this ascending triangle. Draw that one more time. Like so. Well, as we were getting into the rally to the resistance, look at how big volume was building up at that point, right? Building, building, building as we got to resistance, and then it broke again. It broke anyway. So even though you didn't get huge volume as it broke, the reason was because you had huge volume accumulating it in anticipation of the breakout. So that was a lovely little heads up that this was going to make a maneuver, or at least give bullish traders a belief that if it got into the resistance area, it had a substantial opportunity to break out. That is to say, the likelihood of the breakout was increasing by virtue of the volume build heading into resistance. That's the takeaway there. All right, so there's a good way for consideration of screening or scanning the market, and it might be as simple as the scan and one of my classic fallback scans, something like upward trending already, so uptrending with or breakout on increasing volume. Let me see if I've got that. Let's see, uptrend breakout with increasing volume. So that's in the S&P 500. And let's see if we've got any healthcare stocks that just jump off the screen when we do that. Oh my goodness, there's a few of them. So yeah, we could easily search for any of these as an example of process, right? Remember, the top-down approach is the one that I frequently bring to the table here. And the idea is fairly generic in nature and yet can be very helpful. It's starting with your largest group of equities. So starting from an indice viewpoint, S&P 500, NASDAQ 100, even NASDAQ Composite, Russell 2000. We know that the Russell had the best day of all of those groups. And we know that the healthcare sector had the best day of all of the 11 sectors of the market. So this is kind of like fishing within a well-stocked pond. Now we have a lot of equities from which to choose. These equities are going to likely be at upper levels. And if you're a trader who's uncomfortable buying stocks at highs, this might not be for you. But I'm going to load a new watch list. I'm going to create a saved watch list from this list here. So I'm going to, let's see, bring my title over. So we're just going to call this 725 Healthcare Breakouts. And then I'm going to load it right here. And I'm just giving you the steps here, everybody, because I've got, whoops. Oh, I need to go to the first one for the date. 11/25 Healthcare Breakouts. There we go. And so I just wanted to just quickly show how some of those stocks might look. I can sort it by anything. Oh, one other note, when you're building your watch list, don't forget, make sure you're using a customized set of columns. Okay, I've already got my columns set, so I'm going to Kev's. But actually, excuse me, not Kev's, my watch list columns. So I've already created that. Just when you customize your detail here, just hit Save As, give it a title, and then it'll be available for you in the dropdown right here. So we've got watch list columns, okay, and then I've got my detail. So I'm now looking at the mark percent change, the percent change for the day, and then the net change. That's the dollar amount change for the day. Why do I have mark and percent change both? Well, because the mark change picks up pre and post market detail, whereas percent change stops at the conclusion of your regular session. So if there's something different in here, like something moving after hours, this is how that would appear. And I will happily share that scan with you at your request there, Si, no trouble at all. We can do this. Let's see. Oh, is it mine you're wanting to see? Or somebody else's you want to see? I'll share mine anyway. So again, this is it is detailed for the S&P 500 in healthcare specifically, stocks that are trading at a 20-day high and doing so on an increase to volume. And as Brent is kindly pointing out for us, just remember, these are not a guarantee for accuracy or timing, and they are not a guarantee, or rather a recommendation for your use. But here is the scan grid, or excuse me, the scan script, pardon me. Okay. Now, I just want to quickly peek at some of these symbols just to make sure that my scan is valid. So there you've got Merck breaking out to new highs. Probably should have caught this one back here a couple of weeks, huh? We'd have talked about this one on a breakout back on the 12th of November. We would have had a wonderful participation there. This is a great reminder, everyone, of why you got to build your watch lists and then work through them every single day. There is no substitute, in my eyes, no substitute for looking at charts and just knowing what that chart might look like. In fact, if I don't know if it's the case for everybody, but at the end of the day, when I go back through a number of the symbols I saw today, I should, in my eyes, I should be able to see it in my mind's eye. I should see that chart in my mind's eye. That's the way that I go about my process. And the fact that I can see the chart, the way that chart looks in my head, even though I'm sitting on the couch and maybe enjoying a fresh bit of soda as I'm kicking back after a long day, you know what? That gives me the knowledge that I've done the pre-work, right? I'm looking at these charts enough. So moving on through that list, there's another one, RVTY breaking out. Here's another one, Regeneron breaking to the upside. So I hope what your takeaway is nothing else, if nothing else, is, hey, these are stocks in a period, in a location, a sector of the market that's moving to highs. And these are stocks that are also moving to highs. This one's jumping off the screen at me today, everybody, mainly because we have moved through to new highs and off of a major moving average. So, you know, we could draw maybe a line through recent prior highs. Maybe that's new support. Maybe the 200-day moving average is support. Maybe I could add that one as a potential trade. I already had some ideas for potential trades today, but let's see. COO, Cooper Companies. Yeah, Cooper Surgical segment focusing on family and women healthcare, fertility, etc. So that's a pretty intriguing space. But more than anything, the last time you were above the 200 day was way back here, and it was a rejection. So this might be changing. This could very well stand out. I saw you call out Danaher here. Let's take a look, Doramisha. We traded this one as an example recently as well. We did have a trade on this one last week, and it played out favorably. As you can see, bull flag, Baguette bull flag, went to a new short-term high as well. So always nice to find uptrending when you're looking for them. Yeah, you know what? Let's take, why didn't Lilly end up on there? It should have. I mean, that's moving to a new 20-day high. It might be because the volume didn't meet our requirement there. Kev, that could easily be the case. So because volume has to be greater over the last 5 days versus the prior. So or versus the prior 20. So if it's not volume led, even though it's an excellent rally, it might not get picked up. All right, so I wanted to highlight that. Again, the process by which we traders might give thought to scouring or scanning the marketplace. So don't need to apologize, Kev. That's why you're here. We're going to talk through all of this stuff, right? Okay, let us, excuse me, I did a little bit of pre-work today to locate some potential examples, but I did that with my after the close watch list. So as usual, again, make sure you're working through your list, looking at these charts every single day. Let's see how Oscar produced today. So you got a gap move over the last two. This is likely tied to the conversation around the ACA subsidies. So they got a little bit of a positive out of that announcement yesterday that the administration might be looking to add or kick the can, so to speak, down the road a couple of years on those subsidies. Oscar is one of the larger participants in the ACA, so that's why they got a bounce there. Let's work our way down. We're going to talk about Cipher because that's in our example portfolio. In fact, we may very well need to close that trade out. We'll take a look there. Oh yeah, Dragon Rider, of course, this class is being recorded. You'll absolutely have a chance to get to this one a little later. The one I wanted to check on today was Caterpillar. So Caterpillar, let's put this on a 2-year chart. So for our example today, one of our examples, a bullish example, we're going to look at Cat. We've had an exceptional move on Caterpillar. So a couple of things stand out. One, my band of resistance up here at around 410. We got through it, and then you got your standard detail, didn't we? You got your breakout and your throwback. And the breakout throwback move is one you've got to be comfortable with, meaning we look for the throwbacks to former resistance, then they become potential support. When they happen to coincide with a upward trending moving average, all the better. That's exactly what you got right here. We finally got through this little bit of consolidation right here, and the stock has just been continuing its rally. Now we have built what some would call a bit of a bull flag, but really it's just a standard pullback, right? Now this is maybe a little early, but you can see that the stock is trying to get outside of this. What, if you're calling this a bull flag, get outside of the cloth portion of that bull flag, right? So as an example, if we can get through the white line on the upside here, then some traders would think that there's much more upside to come, or at least the continuation of the trend. Now, today is only 1 day above the 20, but we've had a lot of back and forth, and this is definitely the highest finish we've had since we got rejected at the top of the line back there on the 12th. So this might be something worth keeping an eye on, and it might be one you want to position for maybe just giving it more time. And so instead of looking out just a couple of weeks on this, everybody, why don't we give thought to building a long call spread, but doing so over the course of a few months? So instead of looking out to, say, the beginning of December or the end of December, let's go to January. In fact, let's go to the month of January expirations, and let's just take a peek at what we've got to work with. Now, a couple of things before we get there. We've got the rising 50-day moving average coming in just shy of 525. So that could be an area for a potential strike price that some traders would be open to. And then our upside target, last highs were just shy of 600. So we could be talking about a pretty wide spread opportunity here. But the good news, if you're a trader, is to be thinking about this from the standpoint of having capped our upside levels, we can probably put on a trade that is still affordable for us. So let's take a look at something between 525 and 600, but we're going to come lower than 600 because we want to take advantage of upside, but we also don't want to be, we want to get a level that we are more confident we can move through so that we can consider the potential for our best case scenario. So let's go over to the trade tab. And like I said, we're going to skip out to January. So let's look at that January 16 period here. And as I said, the 525 is our 50-day moving average. So we could start looking in the neighborhood of, say, 530, 540-ish. What is the thing that we maybe want to pay most attention to, or at least give serious consideration to? Two things. Number one, we want to pick a long call strike price, which is going to have some volume to it, right? Maybe a higher level of open interest. So we'll pay attention to the open interest column, and we'll also pay attention to delta. Now, I need to remind you, when we're thinking about delta, I think the proper thing to do is always consider, am I looking for a long call at a deeper delta, a larger delta, so that I get more dollar for dollar movement in the underlying contract? And additionally, do I get some comfort from the idea that I have a greater likelihood of my contract being in the money at expiration? Remember, delta is the calculation of two separate concepts. One, the percentage of likelihood of that contract being in the money at expiration, and two, the dollar, how much we can expect the contract to move for a $1 move in the underlying stock. So if we looked at the 530s, the 530 call is a 73-cent delta, meaning we would gain 73 cents per contract if Caterpillar went up by $1. If it went up by $10, the contract should appreciate by about $7.30. Those are just estimations, and that's it. Nothing more. No guarantees in that way, of course. But that's one consideration. Now notice, again, the open interest here. It's a lot deeper at 579, right? Than the 530 call only has 53 contracts. Not likely to matter for us. We're only going to place a one contract trade. But some traders want to have more open interest when they're developing their trade. So give thought to that as well. We will, for our purposes, start at that 530. And remember, I said that 600 level was prior highs. So how high can we maybe expect to get this thing? Well, we could look to 600, but could we do better if we went a little lower? Meaning, could we knock off more cost by going with a lower short strike? So maybe 530 by 580. Let's take a look at how that's going to appear. So the 530 call at 53 ask, and then we cover it by spreading it off at the 580 strike, which gives us, let's say, maybe a $30 price, right? So again, remember our basics. We can make the difference between our strike prices, in this case, 50 points on 100 shares, or about $5,000, right? That would be our absolute max on the trade. 5,000 less what we spend, in this case, $30, or we might have to go a little higher, maybe 32. So we could be spending 3,200 to make 1,800. Okay, hopefully that makes sense, right? The difference between the strikes, 50 points, less what it costs us to put on the trade. Okay, and we're going to go up to 32 because, as a reminder, in the after hours, this has only given us the market value associated at the close today. And so we have to admit that maybe Caterpillar opens higher tomorrow. And if we don't pad our limit, well, then we decrease the likelihood of us getting the trade put on. So we've got to put this with a little bit of a padding. We'll go to a debit of 32. So is this an affordable trade for all traders? Unfortunately, no. It's still going to be relatively costly, $3,200. And yet it can make sense if the trader is comfortable with the delta on the trade and the trend that they're looking at. So we are falling into a uptrend at an area of potential support and starting with a contract that has a higher likelihood of maintaining some of that market value, even if the stock doesn't close above our preferred level of 5.8. I hope that makes some sense. So we'll put this on as our example for a bullish contract here. And there's my max profit opportunity. So 1,800 max profit, 3,200 max loss, assuming we don't exercise any contracts here and we only trade the spread itself. So we'll go ahead and set that up for tomorrow's business. So one thing thank you, David. Yes, let's make that a good till cancel order instead. So I'm going to go right back to it, right click, cancel and replace. And I'm just going to change that from day till good till canceled. So this way, at least I have got the opportunity for this to come through. Even if not tomorrow, it could hit on Friday. Remember, Thursday is a closed market. And Friday is also a half market. So half day won't be there all day for you. Market closes at 1 Eastern, and that'll be the time that we wrap up on the channel here as well. Hey, let's take a look at our example portfolio. We did put on a couple of trades last week. We put on a bearish put spread, a long put spread in 4, and that's working against us. Now that trade, because it's working against us, we don't have to make any changes to it. We could choose, let's see here, we've only got $50, $52 left in market value here on our short 60 put. So we could close that and just carry the long 70. Basically it only costs us $50 to buy that back. And that's in profit technically, right? So we've made $42 on that. So we could choose to close that out, but we've got time on our side here, everybody. So we're going to let that one go. Let's take a quick look at the chart. So this is still in a downtrend, and that's why we've got a bearish strategy on here. Now, it is possible that it's in the process of improvement, as it's 2 days above the 20-day. It's also just as possible, though, that it turns this, I'm going to turn this red, that what it's done over the last 2 days is less relevant, and that it might very well roll back over and make a lower low. The volume over the last couple of days has been lighter too. So even though it rallied and held the 20-day, volume hasn't exactly been giving you a lot of confirmation. So there's really not a lot of reason to make an alteration to our trade here, mainly tied to the fact that we've got as much time as we do remaining in that trade. So we'll let that one go and see if we can't get a little better off on that one over the coming couple of weeks. Now the Cipher trade, it does expire this Friday. And we put this one as a long call spread to the upside. So exactly like we did on Caterpillar, a long call here, one contract long at 13.50 and short at 16.50. Now that's red negative because the stock is moving upward. So we do have a little bit of profit there. But remember, what's our best case scenario? We can only make a maximum of $3, and our cost on this trade was about 125 or so, ballpark, right? 130-ish. Yeah, about 130, excuse me, net. So we actually have we spent 130 to put this on, and we've got 130 of profit. Could we choose to close this out? Yes, we could. By closing it out, we are admitting that we are leaving some upside on the table if we chose to do that. Real quickly, what's your vote? Do you guys, I mean, we should probably close this out, right? Because we're not going to convene again until next Tuesday. So this expires this Friday. Let's go ahead and place a closing request on this. Some of you who would be watching the market, if you were utilizing this for your own examples, you could look at this tomorrow and choose to close it out. You might still have a little bit of upside available. Same could be said on Friday. But for our purposes, and the lack of time to reconvene once more, and the time framed expiration, we'll go ahead and request to create a closing order, and we will go in at essentially the mid. We'll go down a penny, down to 250. So I think a lot of you agree. Certainly looks that way. This one is a bullish trade, though, Rita. So this one is a long call at 1350, and we're short the 1650. Here's how that looks on the chart. We've run ourselves into potential resistance at the 20-day moving average. So we basically picked this up with the belief that it was going to hold because we had those 3 days in a row holding that ledge at 1370. And boy, you can see how 2 days ago, Friday's day, could have tested you a little bit, right? So always interesting to, consider, do I close these out early? Do I let them go? If you close this one on Friday, you wouldn't be too happy with yourself. So yeah, we'll do the closing order, hopefully get this one sold tomorrow at 250 or higher. And we'll go ahead and make that good till canceled so we get it for the rest of the week as well. All right, so hopefully get that one closed out for profit there. But that's going to wrap it for today, everybody. I mentioned it. We do have, we're here tomorrow, but we are cutting out a little bit early tomorrow. So check the calendar for where you can find us. I will be back, like I mentioned, though, with Brent tomorrow morning for Trader Talk at market open. So that's 9:30 a.m. Eastern. Brent and I will surely run through all those major indices. We'll look for leadership once more amongst the sectors and try to set the day up for y'all as we head towards Thursday. And what I hope to be a lovely day off for all of you and all of us as we get a little bit of a breather. So have a great rest of your Wednesday, everybody. Tuesday. Make sure you're subscribed to the channel. If you liked today's conversation, hit that thumbs up button down below for me. And do make sure that you're following Brent and me on X, Brent Moores CS and Kevin Horner CS. We always appreciate hearing from you there as well. So have a great rest of your afternoon. I look forward to catching up with you all again real soon.